Good evening, good evening, good evening, everyone. My name is Simon Mishevich. I'm representing the Property Expert panel for just a second. Good evening. And first of all, I would like to say Happy New Year. When does it start getting a bit boring and dull? I'm not quite sure, but nevertheless, Happy New Year to you all. This is the Property Expert panel, and you should be seeing in front of you the members of the Property Expert panel too, that will help you tonight with all of your property investment type questions, whether it's the law, or if it's to do with tenants, or if it's to do with property investing per se, strategic wise. So as always, I always try and hand it over to my esteemed panel members to give a quick introduction to one another. So Bronwyn, if we can start with your good self, please.
Absolutely, and hello everybody. It's great to be here in 2021. This is our 11th episode, and it's been going from strength to strength, so thanks for joining. We've got some brilliant questions. A little bit about myself. I'm Bronwyn Burncombe. I'm a property investor down in Hampshire. I have houses of multiple occupation, HMOs, holiday lets, guest houses and development. And I also help people learn. And that's the big thing about today, is a lot of the questions are because people are still learning, they're starting out. So I love to help people progress and learn through online courses and maybe occasionally coaching and mentoring. So email me if you're interested in that. I'm sure we're going to talk about it a little bit later. So let's move on to Simon Hodgson.
Wow, okay, right. Everyone knows that Mr. M only gives me about a minute to do this, but I might overrun a touch, ever so slightly. So my name is Simon Hodgson. I'm a whole of market mortgage broker. I've been in property and investing since the early noughties. That's 2000 for those of us who don't understand what noughties mean. I've been around, I've seen it all. I've watched markets come, go, rise. And historically, I kind of learned back in the day that residential mortgage brokers didn't really understand investing and how to creatively strategize buying and remortgaging and recycling your cash, which is kind of where I learned my craft, if you like. I've taken that on. I've now gone on and met hundreds of, maybe thousands, I guess, of investors through various different property mediums. And I guess that's why I'm here tonight, to be able to kind of bring some insight into the financial markets for us. I'm going to hand across to Teresa, I think.
Oh, how exciting. You just don't know who's going to be on next. Hi, everyone. Yes, hopefully you've made some New Year resolutions for this year. It may seem like the worst thing ever to do this year, because it's obviously the atmosphere is not as as perky as normal, but I think it's important to make resolutions. So my name is Teresa Kaczmarek. I'm here representing the National Residential Landlord Association. I have been a landlord for, I think, about 7 years now, a HMO landlord. I've got a property with tenants on benefits and other issues within there. And I've been working for the NRLA for about the same amount of time, because I essentially joined with the NRLA, educated myself, tapped into the advice line, used the legal documentation and, all the forms, and I still made some mistakes, even with all that. But I think the thing is, you really have to just get stuck in there and just learn as you go along, and just know who to draw upon for the right information. So, for example, all the people on this panel and the NRLA as well. Talking about resolutions, now's a good time to upskill. So if you have got that time and the will to do that, the NRLA have got a whole host of courses. Some of you out there may not be getting involved with the lettings business, but if you are thinking about it, or you manage the properties yourself, or even if you use an agent, because sometimes people think, well, I don't really need to know about the lettings business because I've got an agent, they know what they're doing. But I would say, at the very minimum, take a fundamentals course. So it just gives you the basics of being a landlord, and so you know exactly what you're responsible for and what your agent should be responsible for as well. So you can ask the right questions and, you know, get that relationship off to a good start. And I will say that the NRLA are offering a discount on courses. So we've got a 21% discount running at the moment. So, you know, whilst that's on offer, you know, good opportunity to, you know, get upskilled. I do have some highlights. Is this the appropriate moment to go through those highlights? Yeah.
If you could just, what I will do is probably come back to that if that's okay.
Sure. Yeah. Shall I hand over to Paul?
Why not? Thank you very much, Teresa. My name is Paul Hilliard. I'm a landlord based in Birmingham. Started off with buy-to-lets, moved on to HMOs. I've got a rent-to-rent unit. I've got service accommodation units from a 1-bed through to a 10-bed. I've got developments, and I've also got overseas properties. So a very broad spectrum of properties, and consequently, I have a very broad spectrum of headaches to go with it, as I'm sure all investors have at the moment. I'm also the operations director for LMPG. That's the UK's biggest buying group for landlords. We go out and get special deals direct with the manufacturers on boilers, bathrooms, kitchens, paints, carpets, roofing, bricks even. In fact, anything to do with a refurb. So if you're doing a refurb for a very small investment, which is tax deductible, you can become a member of the LMPG and avail yourselves of these bargains. And what's more, just to remind everyone that if you're a member, you can also use and buy the products for your own property. So go and treat your wife to a new kitchen in the January sales. There you go. Over to Mr. Bishop, please.
Thank you, Paul, and I can thoroughly recommend LNPG. Great prices, great products, and you can pay me for that later, Paul. All right, who am I? I'm Tim Bishop, and as you can see in the logo above, I come from a law firm called Banana & Bishop. I own it. We've got about 65 staff, and about 40% of our work is property. And within that, we have specialist teams for property investors. We act for numerous investors, that an increasing number nationwide, wherever they are in England and Wales. And we also have a highly specialist lease extension and freehold purchase team, 5 people doing nothing but that. Possibly the biggest specialist team of its type in the country, and I'm going to come back to that when we deal with the updates in terms of lease extension. We're about to launch some legal masterclasses. What are they? Well, they're free, first of all, and secondly, we firmly believe that too many investors and developers don't always understand some of the legal implications. Now, you don't need to be a solicitor, you don't need to go get a law degree, but actually knowing enough to ask the right questions is really important. So we're going to do a series of probably about 12 short snippets in the next couple of months, and so watch this space for that. And if you want to keep an eye on them, certainly connect with me on Facebook or LinkedIn for the firm or myself, and all the information will be there. I'm also an investor. I've got an HMO, and I've also done a commercial conversion. So I have 6 flats left, 4 of which are SA and going very well. And last but not least, we also run with a chap called John Corey of Property Fortress, online speed networking for property investors. I think this group is absolutely brilliant. It provides information, but I always miss actually I always miss my words. I miss the personal touch, talking to people, getting contacts, networking. So therefore, we've created something that's a complete antithesis to this. It does purely networking, and it works even better when I've put my dentures in. So that's Tim Bishop from Banana & Bishop, and over to the original Simon. Simon, over to you.
Thank you ever so much. And I did notice that I think Paul Hilliard is trying to do the Tunes advert, 1 train ticket to Nottingham, please, because he sounds like he's got a booked nose. I did see him popping pills. I'm hoping they're medicated. Welcome one and all. My name is Simon Mishevich from Optimise Accountants. I'm here to help you grow your wealth whilst reduce your tax liability. And in this format, the YouTube live session, we are taking some questions. We have got some questions that you have asked whilst you was loading into your registration. However, it is live. And to prove that point, we will be going to the live questions as well. We're going to do something slightly different to keep this thing fresh next month, where we'll be giving updates. We'll go through a little bit of a slide deck, nothing too arduous. because we want to keep it focused on you, good listeners. But in the meantime, why don't we pop back to, we'll start with Teresa for your quick updates, and then we'll go over to Tim.
Great, thanks, Simon. I will just keep it to 3 points because it can go on and on, as you say. So my 3 highlights for this month are possession, because possession is quite a biggie at the moment. Previously, prior to the pandemic, you could have filed a no-fault possession, giving your tenants a 2-month notice on the Section 21. And yes, if they hadn't moved out, you would have to go through the courts, and admittedly that might have, added a bit of time onto it, but you could have possibly got your tenants out within the 6-month mark after giving them notice. However, now you have to give them a 6-month notice. So whether that's a no fault Section 21, or if you went through another route, Section 8, but that's another topic. So I'll just stick to the no fault route for possession. So you just really do have to bear that in mind now, because if the tenant doesn't leave after the 6-month period, then you then have to go through the courts, and there's it's all basically backing up in the courts, because they close the courts and they open the courts, and all the cases started backing up. So you just have to bear that in mind. So on that point, it's important now more than ever when you're taking on tenants that you really do a thorough check of your tenants, just to make sure that you're getting the right people into your property, being aware that you may not be able to get them out very easily if you do have any issues. Also, mediation is a key strategy. When you're having issues with your tenants, there are mediation services out there. NRLA have got that on as a service now, so you are advised to go that route as opposed to handing out any notices. My next highlight is about the COVID, because people are thinking, well, can I still get into my property to maintain it, to carry out my legal duties? And yes, you can still carry on with that, obviously adhering by the guidelines. What I'm hearing from landlords is that because we always talk about having a team, don't we? Like you build up your team to make your business easier. So landlords have set up their usual contractors, usual electricians, handymen, and so on. But what they're finding is that some of the, they're not as reliable as they were before. So they're now like, oh God, I haven't got a handyman anymore, or I haven't got an electrician anymore. They've dropped off the scene, or they become so busy they just can't respond to you anymore. So that is something I'm seeing cropping up. So landlords are having to go to, for example, like checkertrade.com to try and find a new contractor to help you with. But just to be aware that you can still access your properties to carry out your legal duties. And the next highlight I had was about tenant types, because the whole pandemic has thrown up into the air what is a reliable tenant type and what isn't. So some people previously might have steered away from tenants on benefits, thinking that, oh, I don't want to step on in that direction. I'm going to go the professional route, or I'm going to go the student route. So all this has now been thrown up into the air. So for example, for student tenancies, the students are now working from home. They're not going back into their rental properties. So that is a really big issue, because, the tenants on one hand are saying, well, I'm not there, why should I pay my rent? And the landlords, well, you signed a contract, you have to, you still have to abide by that contract. So that's, it's just a really big issue, going on at the moment. So it's just bearing that in mind. So a tenant that you may previously have steered away from, you may take on tenants with benefits, because in some cases you have got more reassurances. For example, I let out a room recently, and I had a tenant on benefits, and I've got a guaranteed deposit with the council, and I've got the opportunity of direct rent payment through universal credit. This person also had a support worker that regularly sees him and comes to the property, or I take on a tenant who's on a 0-hour contract. And it was like, do you know what? I know this person's working, but they might be out to work next week. So these are the kind of, things that you have to take into account and bear in mind. And those are my 3 highlights. Should I pass back to you, Simon?
Over to Tim.
Oh, do you know, I was also going to say that if there is time on this panel, I have got some survey results which the audience might like.
I thought you had those off now. No, head it off now.
Do it now.
Over to Tim.
Yeah, and then we'll go to
right. So the NRLA do have a research section on the website. So for those of you who are members out there, you can access that, and it's got all sorts of interesting information, which, can be useful to a potential investor. So the most recent I am looking at I'm looking at the landlord confidence, and that was last assessed in Q3 2020. So we will be due for another update on that. But what that was showing was there were two areas. So we have the least confident and the most confident, and so that's the least confident in the lettings business currently, with regards to their business. And the least confident, where it may not be a surprise, excuse me, but it's London. Inner and outer London are the least confident, and close on the heels are Yorkshire and the Humber and the East Midlands. So that amounted to 55% in total that were least confident going forward. There was about 38%, there was no change in how they felt. And then the remainder, which obviously if you do your maths at this time of night, is not very many. So there was nearly 6% that were more confident. So what does this tell you? Well, I suppose with any crisis, there are going to be opportunities. So for whatever reason, landlords aren't feeling confident in London, Yorkshire, the Humber, East Midlands, perhaps, they are going to be looking to sell, perhaps they may be more amenable to a rent-to-rent deal. So that is that indicator.
Interesting. Brilliant.
And then I'm just looking at the results, because that's how I might just delay for a second as I'm just scrolling down. And the overall sentiment on whether they're going to buy or sell over the next 12 months, 30% of landlords said they were going to sell, and 16% said they were going to buy. So there is still more selling than buying currently. So, that's another interesting fact for, potential investors out there.
Good. I think that's been useful.
Yeah.
If we move over to Tim, then I will stop sharing the screen. I hope you viewers just see how professional I really am. And if you do have those contacts still in the BBC, I'm still available. So Tim, over to your good self.
Hi, and can I just say that something Teresa mentioned is something close to my heart. Both my boys are back from university, and I'm not sure about you guys, but certainly the biggest cost I've had is it property, is it law firm? No, it's my boys home drinking. Is there a government grant to help me with alcohol, because they're going through everything, the wine cellar, your work? So I want to know if there's a government grant to help my boys drink, because I need it. Right. First of all, I have a slide for you, and see if I can actually get it right for once. Let's have a go. Here we go. Oh, hang on. Is there that one? I think it's that one. I think that's the one. Yep, that's the one. Basically, this is the latest version of our monthly figures. And we've been keeping a close eye on the market and keeping accurate figures for the last 12. Hang on, I've moved the wrong one, as I knew I would. Let's get the right one back. Oh, dear Lord. I had it so perfectly lined up. Here we go. So, to get it bigger for you. So there we go. So as you can see, that's been up, that yellow, the orange line is our average. And as you would expect, and it was a bit quiet at the beginning of the year, and then it went right down. In March, as you can see, in April, it virtually stopped. And then it went up. And as you can see, this is the average. And you can see it doubled basically there. So it went absolutely berserk. Well, what I was surprised about, I thought that little bit there would be repeated over there. But as you can see, the volume of that is much, much bigger than that there. And what was interesting is even now, this was October, then November. Now, December drops to below average. But even now, that's surprisingly higher than it was last year. And see if I can actually go back to the other screen now. If I manage it, here we go. That was last December. So if we remember this December, or this gone, goes down to about there. But look where last December was. December is a very low month normally for conveyancing matter starts. So that gives you an idea, going back to the other one, where we've been for the last few months. And that's, as I said, going back to where we are now. So that's conveyancing matter starts. Now, what's interesting is these are live. These are actually people who've instructed us. So we're slightly behind estate agents, but we're so many months ahead of the land registry and often ahead of mortgages, because people tend to come to us as soon as they've got an offer in, they come to us. So this is bang up to date. So it's interesting. And in the first, I think it was the first day and a quarter of the new year, I think we had about 15-20, which again was way over the top. So I keep thinking it's going to stop. It's going to stop. This bust and boom is going to go, but no, it keeps on going. So there is no sign yet of the spike going. But obviously that may well change in the next few months, particularly as people rush to get everything done by the stamp duty. So that is that. So that's number one. My second share, I haven't got a screenshot for because it doesn't really suit it. And that some of you may have picked up the government announcement last Thursday. Now, it wasn't a white paper. It's not legislation. It's not a detailed plan. It was unfortunately in the form of a press release. Now, I say unfortunately because press releases are usually when the government want to sell a concept, want to big themselves up. And it had quite significant effects for the leasehold market. In particular, there were 3 or 4 things. So it's the why, what, when. Now, the why they've done it, I think, is because there was pressure from a lot of houses which were sold on a leasehold basis. And suddenly a couple of years later, the big greedy developers would come and say, give us another 2-3 grand and you can own your house. You don't do so already. And they were doing that regularly. That was the worst. And there was also pressure because of ground rents. In the 1970s, it was common for ground rents to increase every 10 years, double in fact, partly because inflation was so high. It peaked at 15-20%. So it wasn't unusual. When inflation is virtually dead or going 1 or 2%, if it doubles every 10 years, that's really high. So that's why the government felt they needed to act. Well, what have they done? Very good question. Not very much. They've made big announcements. And the 4 big announcements were, number one, they say you will be able to extend your lease. But instead of going for 90 years, you'll be able to get a 990-year lease extension. And there'll be no ground rent. That's number one. Secondly, they say the whole process is far too complicated. So we'll get rid of valuations where people actually had to go and see the property. We'll create an online calculator. Great. No details of how that's going to work. No details of whether you still need to see the property. I really don't know. I'm very suspicious of government online calculators. For your information, there's one for stamp duty. If you go on the government and look at their stamp duty calculator, there is one, and it should tell you what your stamp duty is. The only problem is they do say quite clearly it's not necessarily to be relied on. So if you rely on and get it wrong, you could be penalised. So therefore, government calculators are not to be relied on. Next one, what else they're going to do? They talk about a cap on ground rents. What does it mean? A cap? What? I don't know. No idea. And then they talk about a few other things in terms of no ground rent for people who are buying retirement properties, because they're a bit of a scandal as well. There's all sorts of detail, but it's not detail. It's all, oh, we're going to help you. I think one of the lines is, we'll save leaseholders tens of thousands of pounds. Well, how? When? There's no idea of when. The only date they put in there, they say, and the first thing about ground rent will come in the next legislation will be introduced next session of Parliament. Well, even that's vague. A session of Parliament is not a fixed period. Every Parliament has between 1 and 7 on average. So is it going to be months? Is it going to be years? Then it's got to go through legislation, and that's only one part. Everything else, there's no detail, there's no date. And the danger is everyone will now panic. So there are lots of implications here. If you're thinking of buying a freehold, for example, or buying the freehold of your block, you might be thinking, well, actually, why don't I put it off a couple of years? It'll be cheaper. It might be. But you perhaps ought to look at alternatives like right to manage. So all sorts of changes potentially, but absolutely no detail. We had an email from a client who, even a few years ago, owned the freehold of 16,000 properties, so a major player, and they asked about 12 questions. Now, it only came through about 5 o'clock. I'll tell you now what my answer will be. I don't know. We simply have no idea. There is so many questions to be asked. So there you go. Massive announcement, sending the market into disarray. There's all sorts of questions. You know, will lease extension be much quicker, be much cheaper? Possibly, but sometime, maybe this year, never. I honestly don't know. So that's basically that. One last comment, if I can do on in terms of update, is with regard to stamp duty. Now, stamp duty, as most of you know, we have the current holiday, and that in theory is supposed to expire at the end of March. So far, the government have answered a direct question, will it continue? They've answered no. Now, they've done so many U-turns in the last 6 months, I wouldn't guarantee that, but that is their latest version. They've been asked a specific question, and they've said no. But if you are looking to get a property done now, the chances of getting it all done and dusted by the end of March is slim. And even if you've got one running, don't rely on it. And the reason I say that, you need to make sure if you're doing this, you have funds to pay the extra stamp duty, because there's a realistic possibility, however good your solicitor is, and we're fabulous, you won't be able to get it through. Third-party delays, all sorts of things. So if that's the case, you need to make sure that you have the money for stamp if it really needs. And one last thought on that. There's been an obsession with buying because we're saving stamp. We might save 2 or 3%. Well, if you went to most investors or developers and said, I've got the most amazing bargain you ever heard, you're going to save 2%. Are you really going to go for that? 2% below market value? It's not that exciting. And yet so many people have become obsessed with stamp duty. So just to put it in balance, is 2%, 3% that big? And make sure you got cash if it doesn't go through on time. And that's it, basically. Back to you, Simon. I'll shut up now.
Thank you ever so much for that wonderful kind updates. Just so you listeners are aware, what we are going to be doing going forwards is having this kind of update, as you can see in front of you. So it will be nicely formatted for you next time around. I just thought I'd put this up now because you can see what we're trying to achieve, make it a little bit more professional for you guys, as the standards are expected to improve. So the first thing, as Tim would say, is that stamp duty land tax is due to end March 2021. I have stopped finally saying 2020, but I'm still typing it into all of my emails. Now, that holiday period, as Tim said, was meant to be ending. There has been rumours that it will be extended along with job retention schemes and self-employment income support schemes. So wait and see. It normally is announced on a Friday night at 8 o'clock just to ruin your weekend. So let's not spoil that fun for when Rishi Sunak and Boris Johnson does that again. But on the other side to it, stamp duty, which is worth being excited about, is the change of legislation for stamp duty land tax if you're buying mixed-use properties. Years ago, conveyancing solicitors, not Tim's firm, would have accidentally or incorrectly charged you 3% on residential properties. But if you've got mixed-use properties, they shouldn't charge you the 3% SDLT. And you can also claim MDR, which basically means on a transaction worth £500,000, instead of paying £18,000 in SDLT potentially, you only have to pay 2. So it is certainly worth you checking with HMRC on their online calculator to see how much more money they want to charge you for SDLT, or you can get a professional advisor to help you to reduce it. Finally, on this next point is the deadline for self-assessment tax returns. You are clearly watching us, which means that you have submitted your tax return, have you not, for the 31st of January deadline. If, like me, you still haven't submitted it, then you have a bit more time. There were rumours on a national newspaper, I shan't mention who they are, 2 letters, by the way, in the title. But that particular press said that you could ask HMRC to, with good reason, that the pandemic has stopped you from submitting your tax return. On HMRC's website, they haven't said that at all. So do be careful what you read and work on with the press. And finally from me is capital gains tax. We do need to keep our eye on the ball with capital gains tax, because there has been rumour from the Office of Tax Simplification that they're trying to move it from capital gains tax to income tax. Now, I'm not here to say that's going to be the case. In fact, most changes that the OTS have suggested hasn't really seen the light of day, but it has reached a lot of media again. It's on YouTube, it's on a lot of social media, and people are beginning to panic. I would say this to you: don't panic at this point in time. Yes, there will be some changes, but what I would say to you is it's not time to push that panic button just yet. So this kind of presentation is what will be coming your way going forward. But I think what we should do now is move over to the formal kind of questions that we have, and I'll move over to the YouTube link as well. I did hear someone, my panel members, saying when I was drinking this can of Coke, am I now trying to do some sponsorship? No, I'm not doing it. It is the best that a man can get, for sure, drinking a can of Coke. But I have to be honest, every little help. But what I think we should do now is just carry on and just do it. Tick. So that's none of the professional endorsements whatsoever. So what I'm going to do is go over to those questions. And the first one actually from our registration was about mortgages. So Simon Hodgson, you've been pretty quiet, and I know you've been at the starter's gate now for quite frustrated. So the question to you, my good man, is in terms of types of mortgages, there is one whereby you can use your own bank account. And I think if we can call it, I'm just trying to have a look at it now, in terms of using this repayment down, but using your bank account as a mortgage, if you like. I know Virgin do it. Do you recommend these type of mortgages where you can pay it off anytime you want?
That's a great question. So first of all, just to caveat this, I'm not giving individual tax advice, mortgage advice. I can't give tax advice, that's for sure. But I know someone who can. Yes, I'm not giving individual mortgage advice here. This is a very generalized answer, and if you need a more specific answer, please do reach out so I can give you an individually tailored answer. So in general, these facilities can be quite useful. However, the more recent developments within these facilities tend to have some fees attached to them. By the time you take into account those fees, the actual flexibility of the product is kind of eroded, and you might well have been better taking off the cheapest product in the marketplace and withstanding some of the interest costs, because they can be up to half the price. So just to kind of reiterate, you could get a fixed product on a relatively decent LTV, say 70 or 75 on your own home, at less than 1.5% interest. But on one of these revolving credit facilities, whereby it's an offset mortgage, potentially you can be paying up to 2.5%. So whilst you haven't had to pay interest on the money until you've used it, when you do use it, you're paying a larger cost for it. So it's a tricky one to answer, if I'm very honest.
Thanks for that. That's as splendid as you'll always get with Simon Hodgson on this channel. Let's ask you a question, because this is a predominant question that's coming out, generally speaking, and you are fabulous at answering this question. It's to do with mortgage interest rates. Why do you think they're going to be heading towards the second quarter of this year?
Oh, that is another massively great question. We are relying, I believe, on our great friend Rishi Sunak and what he might well be doing with stamp duty. I think the property market has, really is kind of, if you like, performed really well. If you imagine we'd gone through a general election, the uncertainty of Brexit, etc., December 2019, and we went into 2020 with effectively knowing we were going to be coming out of the EU for sure, and that there was some kind of timetable to it, that we had a elected prime minister who had a mandate. We might not all have agreed with that mandate, however, that's where we were, and the property market that had been depressed for almost the 12 months leading up to that really took off. Caveat that against figures out today. Rightmove is telling us that estate agents are 30% busier this time this year than they were this time last year. And this time last year, they were at least 30% busier than they were the 12 months prior to that. So the market really is moving on in a way that is hard to understand continuing like that. We've had 10 years of great growth, let's be honest, yeah? it seems impossible that Richie is going to let the stamp duty holiday have a cliff edge in March, but he might well do. But should he do that, I do really think there's a high degree of uncertainty, certainly for the second quarter and definitely the third quarter of 2021, unless the government steps in and takes some action. And that will have a huge bearing on how interest rates are going to be reviewed by the panel for the Bank of England committee. At the moment, there's no signs of it of those interest rates changing. So Bank of England base rates will stay where they are, and they look set pretty much to stay like that for the balance of 2021 for the moment, unless inflation pressures change, and that seems highly unlikely. So what we're left with then are banks and banks' margins. Now, if the market slows down and there are less mortgages being granted, the chances of them reducing their margins seem slightly slim, I would have thought, in that they will be lending less money out. However, you've got a caveat with that, the fact if they are lending less money, they need to attract clients in, and they have two ways of attracting clients: rate or creativity with the product. And there's very little creativity that they can put into their mortgage products at the moment. So rates would appear to be something that could come down, even if the market looks like it's going to tumble. But hey, this is no prediction. It's just kind of as I see it. Yeah, and we have massive uncertainty in the marketplace at the moment, set against massive positivity in the market. You know, at the moment we're seeing, aren't we, auctions prices in auction rooms above estate agents' windows. It's just nuts. It doesn't make sense. Anyway, there's a really long answer to what was a simple question.
Thank you ever so much for that nice, brief, concise message. And what I thought I'd do is just make this a little bit more fun, because we talk about endorsements. We do not have any sponsorships at all. That's not to say that that will not change in the near future. So a bit of fun for you. I want you to tell me the brands that I'm talking about. I'll be peppering through these nice little slogans just because it will give a bit of entertainment feel. So thank you, Simon. Time for you to have a break. So what we'll do now is go to a question, and we'll go over to Paul first and then Bronwyn. And the question I had, actually, funny enough, is from the gentleman, I think, Silas, says, to start in property development or to build a property portfolio as a business, do you need a mentor? So I think that would be a cracking question, since have we got a mentor on this show? Have we got a mentor on this show? I think we do. What is the best way to start in property and the type? So they mentioned, should you have flats or houses? And BBBL, I'm not sure what that is. BBL, I'm not sure if BB-8 is on Star Wars, but never know. So let's go over to Paul first, and then we'll go over to our own mentor, Bronwyn, afterwards. So Paul, do you want to give us your views first?
Thanks, Simon. And to continue with the comment, what a great question. I think the starting point, if I remember the question, do I need a mentor? What I would suggest is that if you want to kickstart your property business, then yes, definitely, because you'll be able to learn from the mistakes that other people have made and be pointing in the right direction. Whereas if you don't have a mentor, you'll just zigzag and listen to all the comments that are around in the social media and whatever. So as Simon suggested, I think there's someone here who may be able to help you, but I'll leave that for Bronwyn, I think. As regards where to start, flats, houses, depends on how much deposit you're going to have and what strategy you're doing. Obviously, Bronwyn as a mentor can explain all the different strategies that you can have, but you got buy-to-let, HMO, service accommodation, rent-to-rent, to name but a few. And I certainly wouldn't recommend commercial to resi conversion and developments at the moment, not if you're just starting out. And of course, if you want to jump straight into HMOs, you're going to be difficult to get a HMO mortgage unless you JV with someone. But again, your mentor could be able to explain that in more detail. So is that helping you? Yeah, as I said, it all depends. And as regards for BBL, that is the bounce back loan. And I think the guy was asking, Silas was asking, can you use it for a deposit on a limited company let? I would suggest, Simon Hodgson's probably the expert on that, but I would suggest that the lender won't be very happy and will tell you to go away. But I'm sure Simon can explain that in more detail. But hopefully that helps. If you're starting out in property, great time to start. As we've just said, there's a lot of uncertainty out there. Confidence, as Teresa mentioned, is very low in certain areas. So what a great time. And if you find the right mentor, then go for it. Great opportunity for you, Silas. And hopefully come back in 2 or 3 months and let us know how you're getting on. Over to you, Bronwyn.
Thanks, Paul. And yeah, great question. Lots of questions in that one question. And it's all about where do you start? And that's pretty much what everybody says when they come to me initially is, how did you start? What's the best way for me? And everybody's different. And it really is about your level of existing knowledge, your risk level. Are you financially aware? Are you really confident about money? And do you know you can get mortgages? And I know a lot of people that if they do single buy-to-lets, whether it's a flat or a small house, it's very straightforward. It really isn't rocket science. But if you want to go really quickly and do what I've done, which is, replace my corporate income within 12 months, something along those lines, that's pretty risky. And in that situation, I think you do need somebody as a sounding board, maybe a coach. Mentoring is much more about showing you and doing stuff and helping you much more. But I would say just get going, start with a basic education. And I've got an online program, which is very, very simple, easy to watch videos, 20 of them, including pretty much everybody in this panel who have done a spotlight on their subject. So why don't you just start with something simple like that? And then if you feel you want coaching at any time, that's when you think, okay, now who do I turn to? But do shop around. There's lots of providers out there. Obviously, I'm one of them, but it's a very personal thing. So I think we've probably answered a lot of that, but I'm more than happy to have a chat outside of this. So in the there's an email there. My email. You can just email me, and I'll send you a link to have a half-hour chat. And that applies to anyone that's listening. Book into my diary. Always happy to chat about how to learn. Okay, moving on.
Bronwyn, Paul, thank you ever so much. As it says, Bronwyn's course does exactly what it says on the tin. It does help you also to think differently. So without further ado, let's move on. The question that we've got on YouTube Live, and by the way, if you are attending the YouTube Live, I'm hoping you are, then make sure that you do ask your questions by typing it in, and we will get to you. And Ned, I promise you, we will get to your questions. So thank you ever so much for asking. Will we answer? We will. This is a live session, so we'll be doing exactly that. One of the questions that we've got, funny enough, it's come from client investors, and it says converting buy-to-let to furnished holiday lets. What are the core legislative? I'll get my teeth in. My legislation requirements. Now, what I'll do on that point. It will be good to know from a mortgage perspective what you need to do. If you go from a standard buy-to-let, you need a different type of mortgage. And we'll go over to Tim, and then finally Teresa, if Teresa has got any thoughts on that as well. So Simon, why don't you kick us off, and then we'll move over to Tim about mortgages, and if you've got a buy-to-let, moving to furnished holiday lets.
Right, yeah, absolutely. So pretty much most mortgages in the T's and C's of a normal buy-to-let mortgage will forbid you from doing short-term letting in it. And if it doesn't specifically say that, it will say it in a clause that is roundabout. So without a shadow of doubt, if you are going to be doing that kind of thing, you do need to change the mortgage to one that gives you permission to do it. Chances are the interest rate is going to be a little bit higher. Typically, those types of products start in the 3% and move upwards for a 75% LTV product. they're quite flexible, so they don't require you to have run the business prior to setting up the service accommodation. They will look at the asset on its own, look at how it would rent in the normal buy-to-let market, and make sure that there's enough rent to support the loan as a normal buy-to-let product, but then give you permission to do serviced accommodation from it. There are less lenders in the marketplace that offer that product, which is why the rates are a bit higher. There's less competition, so therefore it's kind of open to the more challenger bank type buy-to-let lenders rather than the really sharp edge end of the market vanilla lenders that particularly trade on rate. Typically, it would take 4 to 6, well, actually probably nearer 6 weeks in today's current market space to get a mortgage like that through and done. And you would definitely need to have at least a minimum of 6 months buy-to-let mortgage experience before you could take one of those products on, or before I could find a way of navigating some of the lender's restrictions that mean you shouldn't be able to get one, if that makes sense. There's always a way to present you to a lender with the right experience, as long as I've had a bit of a chance to coach you in what the lender will need to see. All above board, not doing anything that shouldn't be done, but just you can do things in the right way or the wrong way, and then you come to apply for the mortgage and then realize, oh no, if I'd done that a bit differently, I could have actually got the mortgage sooner. Oh wow, there we go.
And over to me.
Indeed, Tim.
Okay, 2 things immediately leap out at me. First of all is insurance. Do check your insurance, because the chances are what you've got at the moment won't cover it. So I would always go through a good broker who knows a lot about property to make sure you have got the right insurance policy. That's number one. And the second one really is most relevant if you've got a flat, because if you have a flat, you've got a lease. And my advice with leases is always very simple. Read your lease. It's amazing how many people don't read your lease. They can be a bit tricky to read sometimes, but at least it raises the issues. And you may well find your lease actually contains numerous reasons why you actually can't run serviced accommodation. Amongst the ones, for example, many leases will say you can't run a business from there. And obviously that's bad enough to start off with. Other ones, if you're looking to have multiple occupancy, will talk about 1 family unit only. Now, they were very common in old leases. They went out of fashion, but they're coming back in again. So there are all sorts of restrictions which will or will not allow you to actually run service. So if you have a lease, you do need to check. And that's, I'd say, before you do anything else, check that first, because it's all very well if you can get a mortgage, you can get insurance, but actually if you're in breach of the lease, you don't want to do it. So check your lease first of all, go to that document and read it.
And
Thank you. Finally myself. Well, finished holiday lets do fall outside of the Housing Act. So I'm not really able to add that much more to this, except that I do know that you do have to apply for planning permission if you're moving from a residential to a furnished property. That's classed as a commercial, and you'd have to apply for planning permission. But otherwise, sorry, no, I can't give much more on that.
Well, I think you have jumped in with some useful tips there, talking about change of use, because many people fall foul of that. And one thing you also have to think about is rates, because if you're using a furnished holiday let, typically you might, depending on local authorities, because each local authority treats FHL slightly differently. One will say it's fine to go under normal rates. Another one will talk about business rates. So you do need to be very, very careful about FHL. One of the questions I had, going off tangent now, but it was a question from the registration, talk about limited companies. This always crops up, doesn't it? Limited companies. It feels like it's a trend that just doesn't go away. But Jonathan's asked, I'm interested to know if investing in property is a good idea. What are the tax implications? And then following on from that, because I am reading your questions, Ned, so here we are. The spotlight is on you, my good friend, saying, with regards to recommendations setting up a smart company structure correct from the start, do you just mean to work out the combination of share classes? And I think as well, it just talks about can you change them retrospectively? And the thing about tax is, the one thing I would never do, if I'm honest, is go onto Facebook that great platform, which is for professionals, to talk about tax strategy, mortgages, legals, because what you will get on those forums is a lot of willing people who are happy to give you some free advice. Now, there's a great saying is, don't worry about the price of something, worry about the cost of getting it wrong. And if you listen to people on Facebook, not smashing into Zuckerberg, because I can't afford the legal suit, but ultimately it's the people on those forums. You do have to be a bit careful taking advice. So even on this channel, it can be giving you some general advice. So limited companies, we could talk about, well, you should use a limited company, but then I often say to people, well, what about 5 years down the line? Are your circumstances going to change? If so, should your strategy change from a tax planning angle? So one thing I would say is people would say, oh, you're a high rate taxpayer. And I see this from a lot of accountants. You're a high rate taxpayer, so straight away, you must use a limited company. It's like, no, actually, there's so many other things that you could do that could alleviate tax burdens if you just ask some clever questions. But unfortunately, a lot of accountants don't do that. They just rather charge you for the limited company setup and away they go on a monthly retainer. My view is that, yes, you do need to get things to set up in the right way straight away, but I would get some advice and say, okay, for my next 5 years, these are where I'm expecting to be. And that will help, because what that will allow you to do is to say, well, can I use my other family members? Our family members that I'm with, could I utilize their tax band? Could I set up a company for some type of property investments, such as property development, which I think is useful? Now, interesting enough, we've changed our internal discussions about limited companies. So we used to say, limited companies are used for 2 reasons. The first one is tax. The next one is risk mitigation. And we changed that slightly to say, well, actually, there is a third member that we need to think about. Yes, there's income tax, the here and now tax liability. And again, we need to think about in the future, is that likely to be requiring a limited company? The next one is risk. So buy-to-let property investments, generally speaking, the ones that you buy and hold, aren't that risky. So do you need a limited company for that? No, I wouldn't have thought so. For property developments, always, especially if you're going for big, riskier projects, never have them in your own personal names. I'm sure Tim would agree, because if something goes wrong, your personal assets would also be at risk. So definitely not to do that. But the third thing that came out of the conversation that we had internally was inheritance tax. People don't think about inheritance tax, and there are ways of using smart companies, as Ned is highlighted in the YouTube questions. So talk about, well, can you use things like growth shares, where you pass your growth of the company over to loved ones? And certainly you can do. The one thing I would say, even on those things, is that there are pros and cons to everything. So growth shares are fantastic, but if your mortgage company says no to those because you're passing assets at the value over to your children, then how might the risk profile look from a mortgage and lending perspective? So you have to be careful on this. And I'm not going to drag Simon into this question straight away, because bless him, I often feel like I'm doing this when I drag him straight into the conversation. But you can do it for you set up a limited company with let's talk about this: husband, wife, or civil partner. Then you have parents on either side. Then you have children. Before you finish, you could easily have 10 classes. And from a tax planning angle, that is perfect. Then you say, well, fantastic. Thank you so much for setting that company. Now you go to your mortgage lender and they say, yes, that's great. Can you remove those 8 people that you've just put in your company? Because we don't want your children on there. We don't want your parents because it's high risk. We only want you and your spouse. At the worst case, we'd rather just have you, if you don't mind. And then you're going to say, oh, hold on a minute, where does it leave me? And Simon Hodgson and Tim and I are always saying that you need a triangulation, that's the word, triangulation conversation, whereby you involve your tax advisor, you involve your solicitor, and you involve your mortgage broker, because each one of those 3, that part of that triangle, I'm hoping that triangulation comes into your mind not the Bermuda Triangle, because that really has a different connotation. But the triangulation, you should be ticking each one of those corners off, because if you have those conversations, you will set up your company, if indeed you need one, in the right way. So it's more to do with asking you questions in terms of, well, what is your future likely to be? And what do you actually need? Because I think that's really the important thing. So what I'm going to do is, again, I'm going to go over to my YouTube live session questions. So if you are listening to this YouTube live session, please do me a favor, press the like button, because somehow that tells YouTube that people actually like watching this. So press the like button. By the way, don't put a like in the comments box, because we had that last one. It's actually on the video. So if you're using your device, there's a little tick. Smash that like button. That really helps. And don't forget to subscribe to this channel as well.
Okay, so Simon, while you read those, let me just tell people listening to this that if you want to see the Spotlight on Tax webinar that I did with Simon, which is an hour long, I'm very happy to give you the link to watch that. So if you email me separately, I'll send you that, because that talks about the different aspects of tax, not just personal tax, stamp duty, and all sorts of other taxes, capital gains, but it's very simple. The way that we've worked it, it takes you through step by step. So if you do want to find out more, then yeah, send me an email. Okay.
And I have to say, reading that content is finger-licking good. So the next question we have is for Tim, and we're talking about the conveyance process. Now, we're not talking about your efficient business here in terms of your team, but what is the average duration of, and I'm talking about weeks, but it may as well be, well, how many months would someone be expected, especially when they're using a cheap old nasty solicitor on the high street? Oh, you're on mute. You're on mute.
I'm not on mute now. Right. How long's a piece of string? Would you actually expect a solicitor to give you a nice, simple yes or no answer? Of course not. On average, I think the starting position always is the old-fashioned view, is it would take around 3 months. And that's a horrible, vague figure, but it just takes a general one. If you've got a very quick transaction, for example, and there's no chain, there's no cash, there's no lender, and you're not worried about searches, then it can be quicker than that. On the other hand, once you start getting other factors involved, you start getting government organisations now, so searches are going slow, help to buy go at a crawling rate, as I'm sure Simon will say. Then you get lenders going slow, and they are going slow in our experience. That's bad enough. But also, I think coronavirus has made this worse, or different anyway, because solicitors have very much changed their models. Some solicitors have coped with the changes, technological, working from home, using emails. Some haven't. There are some, I kid you not, who still write to us using old-fashioned post in conveyancing. Now, at the moment, the post, it's just dreadful. It's so slow. So once you get that, if you're talking an extra 5-10 days per letter, it just goes on, and you only need one of those in the chain to make a real mess. So the old-fashioned 3 months can be a lot quicker, but it can go a lot slower these days. With stamp, of course, and you saw the figures I gave earlier about the way work's gone up. There's a danger if you don't take on extra staff. Some solicitors are really, really slow. We have a nightmare with some local firms because we know they're so slow. We had to take on 4 extra temporary staff until April to keep up to speed, but it still does no good at all if somebody on the other side is bad. So what I would say is, when you do appoint a solicitor, always make sure you get something good. If you're not sure, come to us or ask your local estate agent. They'll know who the real shockers are, because I reckon half of law firms are tolerable, the other half are just ghastly at the moment and should be avoided at all costs. And your agent will know them because they want to get the deal over the line, and they will tell you, to avoid like the plague some of these firms. So there you go. Was 3 months, now it can be anywhere for a few weeks to forever.
Tim, just
Yes.
while I've got you on the line, Alex Bond has asked the question, what's your thoughts on the government restructuring of leaseholds? Do you think marriage value will take longer to abolish, with freeholders fighting it on human rights legalities?
The answer, I refer back to my earlier question. I don't know. It's so complex. The government have just thrown a hand grenade into it, and we're all cowering in the explosion. We simply don't know. There'll be a lot of businesses which may be absolutely stuffed, but we don't know. We have no idea of the detail. And when I say no idea, I mean none. They saw, oh, we'll save you £10,000. We'll abolish this. We don't know. Yet marriage value is a technical thing. Broadly, if you have a lease extension and once it creeps a second below 80 years, the freeholder can charge an extra value called marriage value, and it can be quite substantial. I'll give you an example. I did a calculation on a calculator a few years back, and I can't remember the figures, but it was something like a 200 grand flat, 150,000 pounds a year, 150 pounds a year ground rent, and the added marriage value was about 4 or 5, 6 grand just on that, literally for a second, over the 80 years. So the answer is I have no idea. There'll be a lot of complaints. There'll be a lot of battling, and don't expect just because the government say, oh, we're going to do it, that it always comes and it comes quickly. So the answer is it may come. How it comes, I don't know. When it comes, I don't know. We have no idea. The government have actually created uncertainty. So I'd love to give you a straight answer. Even as a solicitor, I'd love to give you a straight answer, but I can't.
Fair enough. There you have it. One question we had from Ben, who registered for our event, asked a question about sourcing of properties. And I think this would be worth going over to, again, if we may, go first to Bronwyn and then to Paul. And it's about sourcing. Maybe there's two aspects here. There's you buying a sourced deal and then you sourcing deals for other people. So would you give us your thoughts? Let's go over to you first, Bronwyn.
Yeah, sourcing is a big topic. There have been lots of free courses out there and lots of marketing to say you don't need any money to invest. If you become a sourcer, you can earn money, and there's a lot of misleading marketing out there. If you've got a good property education and you understand how to find motivated sellers, how to find really good deals, and you can qualify those and be a proper sourcer where you negotiate the price and you've got that price negotiated and it's off the market and you can package it all up. It's a huge job. It's a big responsibility and you do need to be qualified. But there's so many courses out there that just go, oh yes, you don't need any money and you don't need to know anything. Just come on my course and you can earn all this money. It's rubbish. Honestly, the number of people that have come to me and said, oh, I've just spent £5,000 on a course. And they're like, gosh, they can spend 500 on mine and learn so much more. So sourcing, just be very, very, very careful. You've got to do your due diligence on any sourcer. And if they haven't got any of their own properties and they've got very little experience, then it's probably not worth it. I've checked a few people out. I've looked on Rightmove at the property and it's still on the market, would you believe? So there's no way they've sourced that property. So I can talk for hours about this because I get a bit frustrated. But if you truly want to do sourcing, you should already have experience of doing your own deals. And if I can find a great deal and I think, oh my goodness, this is a brilliant deal, but it's not for me at the moment, I'd happily pass that on to somebody else. But I must have already negotiated it and done all that homework and all the figures and all the details before I then get a fee of maybe £2,000 or £3,000. It's not a huge amount for the time and effort required. So that's my summary of what I think about sourcing. But yeah, I'm sure other people have got some views and perhaps some positive experiences. Don't know.
Let's move over to you, Paul.
Cool.
I'm not so sure about positive experiences, Bronwyn. I think let me just reiterate what Bronwyn said. First of all, if you receive a sourced property, make sure it's not on Rightmove, because if it is, then anyone can get it. Two, how long has your deal sourcer been doing deal sourcing? Because as Bronwyn said, there's a plethora of courses out there. I regularly get emails saying 5K for this property, 4K for this rent-to-rent deal. I mean, it's shocking. You don't even make that much money in a year. So why the heck would anyone think it's a deal? It just blows my mind. I go, what are you talking about? And these are from, I would say, fairly reputable people in the property arena but they're just doing a service. You know, somebody wants 2K for their deal, they want 2K as well. Somebody else wants that. So there's £5,000 worth of fees on one single deal, and at the end of the day, it's not a deal. So, and the last thing is go and have a look on some of the property forums, get some flavour as to whether this property sourcer is actually got a good reputation or not. One of the things that concerns me is that they come to you and they expect money up front. Oh, I want to see that you're serious about this. So I want £1,000 off you. You will very rarely get that money back. So my suggestion or recommendation would be, don't do it. Walk away. Nobody's worth £1,000 for information which may be available elsewhere. I think Ben was asking whether you should look at doing online deals, and I would say, don't be silly. What are you bringing to the party? If you haven't negotiated the price because it's on Rightmove, what can you charge for it? If you're clever enough and learn to do it properly, you can source the deal, negotiate it, and then better still, get all the parties concerned. So get a solicitor for the vendor, make sure it's tied up properly, so you've got an option agreement on it, and do all sorts like that. But it's such a how long, as we said earlier, to use Tim's phrase, and I could go on and pretend to be a solicitor and say, look, speak to me for the next hour and I'll charge you 250 quid for that privilege. You cannot just accept these guys on face value. You've got to go and do your research, do due diligence on these people before you go and buy. There's a lot of rogues out there, as well as a lot of people who, I wouldn't say rogues, they just don't know what they're doing. But back to you, Bronwyn.
I think Ben also is asking about how does he find off-market deals? And off-market means it's not on with an estate agent generally. And that's about finding motivated sellers, landlords who perhaps are fed up with managing their own properties, or they don't want to pay for estate agent fees. Now, he talks about, and a lot of people do this, is send out landlord letters, send out letters to existing landlords. And that can work well, but it isn't just sending one letter, it's the follow-up letter and the third letter and the fourth letter. By the time they get the fourth letter, they're thinking, okay, maybe now's a good time. So you can't do that once, Ben. You need to be doing it several times. And people hang on to these letters, and then in 6 months' time, they may well phone up and say, now I'm ready to have a conversation. They do work. There are very motivated landlords out there who've had enough because they're not educated, maybe they're paying too much tax, and they want to find a way. So it does work, but get the best education you possibly can to understand, whether it's worth your effort. Okay, on that point.
Sorry, Bronwyn, staying with you actually, because Ben does ask, I'm going to move from, I'm going to go to you first, Bronwyn, but then over to Teresa, because he does say, what are some of the best ways to determine demand for HMO rooms? So maybe if you could talk about the platforms that you use, and if anyone identifies anything differently or more than what Bronwyn has, please do shout out afterwards. But the question to you then, Teresa, will be, well, what about ASTs? Because they're not single let properties, they are HMOs. Do they need to be different? So Bronwyn, let's go over to you first. How do you establish if there's demand for HMOs in a certain area?
Yes, and this is really important because this is the fundamental things about investing. You've got to understand what area are you going to invest in and what's your tenant type going to be. And so you've really got to understand, put yourself in their shoes and say, if I'm going to be, say, thinking about creating an HMO for students or for young professionals, put myself in their shoes, where do they want to be living? Obviously, students want to live within, not too far from where they're going to be studying, or at least on a bus route, travel route. If you're a young professional, you want somewhere that's pretty chic, quite nice, upmarket. Maybe they were a student, they don't want to be in the student areas. So you've really got to understand what the tenant wants. There are lots of places you can go online. Spareroom.com is a very common place to go looking for rooms, but there's all sorts of other apps these days that you can look at. I'm sure some of the panel here might be more up to date than me on that. So I have HMOs for young professionals and workers. That's my sort of route. But I've always chosen city centre, you know, commutable to city centre type of location. And I've talked to agents in the area. I've gone onto the Rightmove and looked at what's available. But more than that, I've gone to my potential tenants and said, where would you like to live? What's a good location? So there's all sorts you can do. I'm sure some of the other panel would like to comment, but Teresa, do you want to come back to some of that question?
Yeah, sure. I was just going to add that if you do get involved with HMO, just be aware that you are entering into a whole new legislation arena. So you will have to make sure that you abide by like the amenity standards, the HMO management regulations. Also, the local authority will have their own set of, you know, regulations that you'll need to follow. So just want to add that in there, just in case you haven't taken that on board. With regard to tenancy agreements, you can either, with a HMO, the whole property can be on a joint and several tenancy agreement. So you might, for example, have 4 students in there. It's a HMO, but they're on one tenancy agreement together. So if one person leaves, it, you know, almost at the contract then has to be rewritten, or you can have a room only tenancy agreement. So that's the kind of tenancy agreement I use. So those are available on the NRLA website, so you know that you're going to be getting, you know, a good legal document to start to tenancy with.
Yeah, and I think as an NRLA member myself, I always use the credit check referencing for all of my tenants. I always use the ASTs and the inventories because I just find it easy to use those kind of systems at all times. And because the NRLA keep them up to date, I don't need to worry about that. And I'm worth it. So let's move on to the next question, which was about general rule of thumb. I'm not even going to pronounce this name if I'm honest here with you, so I'm just going to go straight to the question. Is there a general rule of thumb of a simplified way to estimate building costs, refurb costs for London? And I think we can really say nationwide, it doesn't necessarily need to be London, like knock down a garage, build a 2-story side extension. Well, I would like to pass this over to Paul and to Tim, really, because I think, Paul, from your side of things, you're in the LMPG, you're a property investor yourself, you know what builders can be like. One builder could be fantastic, the next building not so much. And then over to you, Tim. How do you protect yourself from builders, and are the contracts available? So let's start with you, first of all, Paul.
Yeah, another great question from, I think I would say Willem. My apologies, Willem, if you're not... if your name's not pronounced that way. How to estimate build costs? What I would suggest is that if you are serious about this and you want to use a reputable system, then one of the systems that, dare I say, LMPG can recommend to you is one offered by a company called Hodgson, which is one of our suppliers, and they have a company called Build Aviator, and they have a fully product and labour portal, which will, for a fee, work out your price for a project. If you tell them what you need to do, and they will work everything out for you. So well worth investing in that. As for myself, if I'm looking at well, I won't say a light refurb, because a light refurb is really, in my view, just a lick of paint. So you just need to pay some between £100 and £200 a day for painting services. But I would tend to suggest that for a medium-sized refurb, look at for anything from £100 per square foot. And if you're looking in London, then your starting point, I would suggest, is going to be £150 per square foot. And if you use that as the basis, then go from there. But really, as I think I suggested earlier, if you're into developments, don't go into developments as your first project. You've got to learn and be careful. And again, without wishing to blow our own trumpets, but discuss with Bronwyn what advice she can supply to you as regards if you want to do a development course. But as regards products, then come on, speak to LNPG. So over to you, Tim, to warn people of lovely builders.
Yeah, this is always an issue, and there are 2 or 3 bits of advice I would give. Number one is always do plenty of due diligence. And what do I mean by that? You really got to check these guys out. So many people can claim to be this, that, or the other. So you've really got to claim it. Now, what's amazing is I've been on courses, joint ventures courses, by major training organizations. And I've raised the question of due diligence. No one has ever actually defined what due diligence is. So as part of, a bit of an advert here, as part of the legal masterclasses, I've got a due diligence checklist. And there's no charge for it, but I haven't quite finished it yet. But I've gone to banks, I've gone to various other people. So I've got a list of just some of the things you can do. But the principle is do as much checking as you can, because people actually will not always tell the truth, I'm afraid to say, and builders, like anybody else, are prone to it. So just because they say, oh, I've done this deal, I've done that deal, I own this property, it isn't necessarily the truth. So due diligence is really important, particularly if it's local. Check with the people, preferably who the builder hasn't recommended, to see what the work is really like. That's number one. Secondly, the critical thing is here, get it in writing. Now, very boringly, the first thing I learned when I was at university about a contract, what's a contract? It's offer and acceptance and consideration. Consideration is value. So in other words, if I say to Simon here, Simon, I'm going to buy your business for 50 quid, you say, bargain. That's not a contract. Until I give them the 50 quid, that's a contract. So therefore, be very careful that you haven't accidentally entered into a contract where you haven't got clear terms. My advice, therefore, is always put it in writing. You can have an oral contract, but the problem there is proof. I said you did it, Simon said he didn't do it. Who's going to tell the truth? So therefore, due diligence, get something in writing, clear as possible. If it's a bigger deal, then you need to do it properly. Don't cut corners. If it's a bigger deal, and for example, when I did my commercial conversion of 6 flats to an office, that was big enough to use what's called a JCT contract. And they're very standard, but they're useful. And one trick on those, on the bigger contracts, is think about delay clauses. We picked a builder who I let someone else do the due diligence on, and it turns out it wasn't terribly good. But because the JCT contract had a very, very, very clear contract, it was about a 1,500 delay per week. He was about 3 months late, and therefore actually we sacked him as a result, and the bill was massively reduced because he just couldn't finish it. So therefore it saved us a small fortune. So therefore, due diligence, get it in writing, and if it's a bigger contract, don't cut corners, go for a JCT. We don't prepare them. We work with a really, really good construction law firm, boutique firm. They don't do much else, and we'll introduce you to them. But get it in writing is probably the biggie. There you go.
Excellent answers, I have to say, really good. And I think that in terms of the contract, yes, that's what I learned as well. And just make sure you get it in writing and make sure you verify what they say by what they do. And tick it off and make sure that they understand that from the outset. So you are going to go through that every week or every month, and you're going to thoroughly go through what they said they was going to do against what they've done. Make sure.
Can I come back on that, Simon? Because actually I've got a really good example to share. That if someone like me can make these mistakes, well, anyone can, but I learned my huge lesson. The commercial conversion. The build cost, I can't remember the exact figures, I'd have to go back, about 400 grand, so it wasn't insubstantial. And I went around the building. Now, the building had 4 big windows. And when I say big windows, they're probably 10, 12 feet tall, really wide. And apparently, they weren't in very good nick. And they weren't perfect. It was a building that built about 20 years before. So they were planning on replacing them at considerable cost, taking them out, replacing them. And so I went around both with my project manager, because I had a project manager who was a specialist to do this. And so I didn't think I didn't need to do much, and the builder. And we wandered around the building, and I pointed to the window, and I said, that window, yeah, you're going to replace that, and it costs whatever, 1,500 quid or whatever. It was very high. And I said, yeah, that's the one you're going to do, yeah? And then I said, and there's a bit of rot on the sill. Oh, yeah. And there's perhaps a bit of misting there, but you could just replace that bit, couldn't you? Oh, yeah. So, in fact, rather than replace the entire window, we replaced the sill. And neither the builder, again, it was in his interest, or the project manager pointed that out. It saved me thousands. So don't trust other people. It's your money, the money in your back pocket. No one will ever have as much interest as the cash in your back pocket as you. And I learned that mistake, and I almost lost thousands of pounds just by trusting a project manager who, by the way, has been in papers as an expert. That's all he does, but he just didn't pick it up on it. Didn't seem to be bothered. So there you go. There's a warning from me, a mistake I almost made. There's
a great saying, funny enough, and it's hire the best and don't trust anyone. Do you know who said that? Donald Trump. So let's go moving on then. One of the questions that we got was talking about Ania said on YouTube Live, said, I live with my parents, but have nearly a fully paid off flat in London, which is rented out. I'm not sure whether to keep it or sell it and wait for the chance to buy something cheaper. And I think this opens up nicely, just a kind of, let's talk to Bronwyn and let's go over to Paul again, maybe on this question is, what do you think the property market is going to be like in the next, for the 2021? And buying in London, that's always a good one. So as a whole, then London.
Okay, do you want me to go first? Someone else want to?
Absolutely, go for it.
Okay, all right. So, Amelia, yes, it's fantastic. You have an asset there and you've nearly paid off the mortgage on it. Well, you know, I would say go actually make the most of that asset. If it's renting well and you're making a good profit on it, why don't you borrow against it? Because it's a cheap way of getting more funds, and go buy another one. The market generally, I would suggest, because finance is cheap, because finance is cheap, you can use leverage of finance to buy the asset. Now, property prices have gone up during last year, despite the media and everybody saying, oh, it's going to crash. So it shows that people who've got knowledge and investors are still investing, and they're still putting their money because it's a great return on investment. So this year, I don't think that's going to be any different. You've just got to really focus on the area that you're going to be looking at. And when you open up to the whole of the UK, there'll be parts of the UK that are not great investing areas. And you've got to do your analysis and understand, how do you do that? London is a very different microcosm. It's a very different area, and there's a lot of investors from China and Russia and wherever coming into the market still, and that's pushing prices up. So London's a very different marketplace. I don't invest in London, but if I did, I would really have to understand the different boroughs and, you know, what's the sweet spot for what you want to achieve. But yeah, 2021 is going to be fantastic, just as 2020 has been for me and for us and for the people that are learning with me. If you get the right education and understand how to do the analysis, you can find motivated sellers, buy below market value, you're going to, you know, reduce your risk and increase your profit. So yeah, I'm very positive as ever this year. Over to someone else.
Paul, let's go to you, my good man.
Yeah, I echo what Bron was saying. Buy, refurbish, revalue. That's a great strategy to have. My concern would be London, and despite what Bronwyn suggests about overseas investors coming in, which they are, and they do seriously look and concentrate on the London area, a lot of the forecasts are suggesting London flats are going to be very slow this year, and that's the flat market because of COVID. Because people are looking to move from the flats to get out into the suburbs or the countryside. So I don't pretend to be an expert on the London market, but I'm just saying, be warned, be careful what you're doing there. But if you're based in London and you know London and you know your area, then if a property comes up that's a bargain, take advantage of it. You know, don't pay full market rates if you can avoid it. Get it up below market value, and if it's one that needs refurbishing, then that's how you're going to add value, especially if you use LMPG products. So come and talk to us on that. Come and talk to Bronwyn as regards advice on which areas to look at. But yeah, go for it. It's a great time. You know, best time to buy a property was, as they say, 20 years ago. Second best time is today. Go for it.
Thanks so much for that. Now, I just realised the time, because time is going by very, very quickly. It's already 25 past 8 in the UK, different for Bronwyn, where it's several hours in front, I'm sure. So I'm going to crowbar these quick questions in. And one of the questions I have is, how can I pass, or how can my parents pass assets to me? That is from Steve McCavity. And I think someone else was asking the question. Yes, Xiaoming Zheng has asked the same question. So can you, for IHT purposes, use a trust, or can you just pass some assets down? The one thing I would say is that once you go over your IHT lifetime allowance, again, this could be a big subject. I'm going to distill it very quickly. If your parents or you go over your IHT lifetime allowance, which is 325,000, there is an uplift on your home, so you could get 500,000, and that's per parent. So your parents as a whole may have assets up to £1 million if the circumstances are right. Anything above that will be subject to 40% tax. So the question is, should your parents dispose of assets by giving them to you? Well, if it's a home, that's not such a problem. If it's a buy-to-let investment or any other type of investment, they may have to pay capital gains tax even if they give it to you for nothing. So sometimes you have to be careful with doing something for one tax to be mitigated, only to be paying tax upfront on a different front. So, and bearing in mind capital gains tax potentially could change. Well, you may, I said this on my YouTube channel, that anyone doing IHT planning, if the CGT becomes 40%, well, it makes no sense to do tax planning at all. Why pay forward your IHT bill? You may as well just leave it. Now, they did talk about trusts as well. Are they useful? For me, you can use a trust. You only really need a trust. And I'm going to go over to Tim in a second, because I've got a couple of questions for Tim. But you only use trust, in my perspective, if you don't trust your children. So if you've got an asset, you want to pass it over to your children, but you don't trust them to make wise decisions, or indeed their spouses, more in particular, and you want to control that asset, then use of a trust can be very, very effective indeed. But they can be expensive, and they can be arduous to maintain. And you've got to be very careful with who your trustees are as well, because there's a legal obligation to get things right. So whenever someone says, can you be my trustee? I always say, do you see that door? And that's the end of that conversation. So Tim, over to you. Talk about trusts, first of all. What's the quick pros and cons?
I think you're right, Simon. I think it's largely about if you want to keep some element of control. But having said that, the whole point of a trust is actually you lose complete control. So it's quite complex. So you don't still own the property. You can't necessarily completely control it, but you have a restriction on what somebody else can do. There are costs, certainly. Just setting up a trust isn't necessarily as expensive as you might think. But as you say, there are costs involved in maintaining it. And in fact, we actually do run quite a lot of trusts. We have a trust administration service. But again, there are costs there. We use it for plenty of purposes, sometimes for property or education. We also have other circumstances where there's a family member perhaps who's very vulnerable, and that's when they're particularly useful. We do it for a number of people where they really are very vulnerable. There's a guy we act for who actually is, sometimes he's homeless in London. He's got massive mental health problems and drug problems. No way would they be able to give £500,000 to him, but obviously we have control of that and can try to support him. So I think, going back to your original point, Simon, trusts are a useful part of the arsenal when you come to tax and planning and inheritance. This is not a one-off, and the danger here is we're just being asked what's good about such and such. I think the thing is, you can't cut corners on this. Do some research, find out what they might mean, but then you really need to speak to your triangle, your little baby bell triangle, Simon, to do a bit of advertising, your baby bell cheese triangle, solicitor, financial planner, and an accountant, to see what works for you. It's bespoke. This isn't something you can just take off the peg. It is bespoke, and it can make quite a big difference, either saving money or actually, if you get it wrong, it can cost it. So it needs to be your personal circumstances, but yes, they can be useful and not necessarily as expensive as you might think. But look at it as part of the whole will, inheritance planning, tax planning.
Yeah. One final question to you, and this is a very interesting question from Ricky, Tim. He says that has the law changed to make it easier and cheaper to purchase freeholds where there is an absent landlord?
Absent landlords don't make any difference at the moment. Absent landlords shouldn't worry you too much. There is a process you can go through. Actually, that are very boring. You apply to county court for a vesting order, then you go to the tribunal. And actually, if you've got a missing landlord, actually you can get quite a bargain, because normally on any freehold purchase or lease extension, you have two parties negotiating. You have the leaseholder and the freeholder. Now, the beauty here is once you can prove there is no freeholder around, and weirdly, some just do vanish. If you can't track them down, then actually there's only one part negotiating. So as a result, additional legal costs, but often a cheaper price. Have the new announcements made any difference? Well, going back to my earlier comments, we don't know what the new announcements really are, but they don't affect missing freeholders substantially, but they may well affect the price you pay for the overall enfranchisement. Yes. So again, not a straightforward answer, I'm afraid.
Great. And maintaining professionalism of the Beeb on YouTube. I think we need to draw this meeting to a close. I appreciate that there are plenty of questions that were still there. What I would ask you to do is join us again next, the first Monday of the month, which, funny enough, is the 1st of February. So you don't have to wait too long before you get those questions. Bronwyn, before you finish to a close, everyone, not the Queen, she has not asked for it, but some of the people attending the YouTube Live has asked for the tax link document. So certainly if you can send that out as part of the distribution tomorrow or whenever you can, that would be appreciated. But Bronwyn, would you take it away to say goodnight?
Yes, thank you. The time flies by, doesn't it? And the beauty of this is that people are asking questions in advance. They're getting used to now attending this. And the experience of all of us here is that not only are we experts in our own field, but we're also all investors too. So we've got personal experience, and that's very much why I value my expert team and how I always give my expert team connections to the people that learn with me as well. You've already seen some amazing bargains of money off, you know, with Teresa on the NRLA, that's over 20% off. Fantastic. I'm offering over £200 off my program, but only to people at this event. If you attended it last month, you would have got an email from me. It may be in junk, so check it. And you get a code for £200 off my program. That makes it ridiculously cheap. So there's no sales here, is there? But I just want to say thank you to every one of the panel here for their time, for thinking about the questions in advance, for giving us their top 3 ideas of things that have happened recently, and you're going to get more of that next time. So for all of you here live, thank you very much for attending. Click that like button and tell all your friends about this event, first Monday of every month. We love it, don't we, guys and girls? Don't we? We love it. It's fantastic. Somebody said to me the other day, why do you do it? I'm like, you know, you don't earn any money from it. Well, we like to help everybody, don't we? We like to give good advice from people that really value helping other people. So that was probably long and drawn out, Simon, but from the heart, from Namibia, where I'm volunteering at the moment, 2 hours ahead. It's now 10:30, and it's, well timed that I probably called it a night. But thank you ever so much. Thank you, everybody here and everybody attending. And I'll see you on the 1st of February. Cheers.
Thank you, guys.
Bye.
Good night. Bye-bye.
Bye.
Bye.
Okay, finished. So we're still online. So unmute.